refill your glass, you are going to need something stronger for this one. We have successfully bought the asset, we have capitalized the installation costs, and the machine is humming. You would think we could just let it sit there and do its job, right? Wrong. Welcome to subsequent measurement under IAS 16. This is where the accountants ask, okay, we know what you paid for it, but what is it worth today? This is the part of accounting that feels like an insecure teenager seeking validation. We already recorded the asset. It's on the books. Why do we need to keep poking it with a stick? The IASB gives you a choice here, which sounds like a trap. You have to choose between the cost model and the revaluation model. The revaluation model is the annoyance of my existence. It requires hiring appraisers, arguing about fair value, and creating volatile swings in your equity that scare the shareholders. It turns your solid, reliable balance sheet into a mood ring that changes colors depending on the market. It is administrative masochism. Imagine you are going to your 20-year high school reunion. You have two strategies for how you present yourself. Strategy A, the dad bod. That is, the cost model. You show up exactly as you are. You admit you have aged. You are not trying to trick anyone. Yes, I was 180 pounds in high school. I have gained 40 pounds a year. Therefore, I currently value myself at a solid 220 points. It's honest. It's predictable, it's low maintenance. Nobody is surprised, and nobody is impressed. Strategy B, the influencer. That is the revaluation model. You decide you need to look like $1 million right now. You get Botox, you get a spray tan, you rent a tuxedo, you lease a Porsche for the night. You walk in and say, look at me, my market value is sky high. The problem? This is high maintenance. You have to keep getting Botox every year to maintain the look. And if you stop working out, your value crashes and everyone notices. Plus, you cannot actually spend your good looks. It's just on paper. As IAS 16 dictates that an entity must choose either cost model or revaluation model as its accounting policy for an entire class of assets, my verdict is, don't complicate your life unless you have to. Stick to the cost model. It saves on audit fees, it saves on appraisal fees, and it keeps your earnings smooth. When do you use the revaluation model? Only when you are desperate to look rich. Maybe you want a loan from the bank and you need your assets to look valuable as collateral. Maybe you're about to be acquired and you want to drive up the purchase price. Otherwise, keep it simple. Depreciate the asset, take the tax deduction, and go home. Let the academics argue about fair value. We have a business to run.